Yes, it is Quadruple Witching Day. That's when you get futures and options on indexes and equities expire. It means a lot of volume, a lot of volatility. Joining us more for Benn Eifer at Qvr Advisors, founder and CIO, joins us. Ben, that's typically what happens. Is that going to happen this time?
Yeah, my guess is not too much today. I mean, I think the mechanism that, the reason why everybody always gets excited about expiration, and especially quadruple witching expiration, is if you have big short positions on options that the dealers and market makers have expiring that day, you can get really big whippy moves as they, frantically try to rehedge their positions as options go from in the money to out of the money. These days, I think the best case for, where are dealers short, significant size in expiring options, it's probably in tech names, but those strikes are probably higher than here. If you remember a lot of that parabolic rally in the NASDAQ through August and into early September, a lot of the upside that, retail clients were buying, short dated, we've sold off a decent amount since then, and a lot of those strikes are well out of the money on the upside. So I think if you had seen a big rally today in NASDAQ, you might have had a case for, some real excitement and volatility to the upside. I don't think there's going to be a big effect of that stuff today. It doesn't look like.
Yeah, we're down by circa 0.5% on the NASDAQ. So as you say, that certainly doesn't point us in that direction. Ben, how much of a washout has there been this month in terms of what you've just described? A lot of those calls are out of the money. I'm just wondering where that leaves the people that have been in this frenzy of activity over the last few weeks.
Yeah, it's a great question. When you look at some of the charts of small trader, net buying of upside call premium, those charts were really dramatic over the last 6 months. And, coming into August, up 5 times in terms of the rate of, notional buying and premium buying. You saw big fall-offs, over the last couple of weeks as the market, took a step back and as some of the froth came out of tech. Some of those rates of option buying are down by 50%, over a short period of time. So clearly you've seen, some material losses among the folks that were most aggressively buying short-term upside in those names. You've seen a pretty good step back in the rate at which they're piling into new positions. So, that's where we are now. I think it's too early. It's probably too early to call the end of the trend. I mean, if you think back to March, I think we all thought, oh man, markets were down so much, and this community's just gotten crushed, and they just came right back, twice as strong. So we'll see.
Yeah, Ben, where are they coming back right now? Because the trade over the last few days has been, sell tech, you like industrials. What are they doing? Because they've been front running the big managers and hedge funds.
Yeah, I think so far most of the retail flow seems to have just kind of gone on somewhat lower activity levels and pause. I think we haven't seen a dramatic rotation there into new, into value, for example. You have seen this rebound in value relative to momentum and tech, to your point. One of the big themes I think that you saw retail excited about the last couple of days was the Snowflake IPO, right? And that's, of course, right back to, to tech and to software as a service. So, haven't yet seen a big thematic rotation. We may. Clearly, there's some nimbleness in that community. I mean, they were very heavily investing in bankrupt companies and beat down value names back in April and May, before the rotation back to tech. So we shall see. But for the most part, I think they're, we just are consolidating and, waiting to see what happens next.
But fundamentally, this hasn't changed the nature of the markets, this sell-off that we've seen. Your sense is that these people are still ready to come back, and as you say, come back quite strongly. We may be in a period of consolidation, but we're not done yet. A lot of people are making comparisons with, particularly post-Snowflake this week, again, with 2000. Are we done? Is the kind of the froth going to come back?
I think it's very hard to rule out, the froth coming back. Keep in mind, this is it's a very big, very broad community of retail individual investor participation in option markets that we haven't seen for a long time. There's some folks that are presumably very small accounts and, just testing. But, we see very big evidence of very broad-based participation, again, across brokerage accounts. It's not just a Robinhood story. Mm-hmm. It's not just a Reddit story. It's every major brokerage. And, you have folks with, real incomes and real money to spend who, aren't out going to restaurants, in Manhattan, they're trading options instead. And I think that calling the end of that, I think, clearly there was a setback and some losses, and probably the most, people who are too over-risked and had too much capital at risk, maybe took a big step back. But I think it's way too early to call the end of this story.
I like that. It's like options versus dinner out. That's pretty funny.
That's right.
I like that analogy. Here's an unfair question, but when they stay in the market in this way, are they going to be in it in the same way? In that we saw a lot of call buying, et cetera, and options on single stocks rather than, say, on an index or protection for the downside. Is that strategy, regardless of what the stocks actually are, is that strategy still in play?
I think it is still in play. I mean, ultimately, the bid to the upside and, the call, I think comes from the fact that, markets have very strongly trended up for the last decade. Every sell-off, even a very big sell-off in March, ended up reversing fairly quickly. And so I think you still see that bias, very strongly among this community, and don't necessarily expect that to reverse. I think that the single stock focus as opposed to index focus, comes, in part from the fact that, part of this is about, people who have some money and have some time and are learning about something new and it's part of an entertainment angle. And there's much more of a story about individual companies and single names and, what you think might be happening versus, those big boring indices, right?